afternoon, and welcome back to Talks with the Tax Cop. Hi, my name is Patrice L. Berry, enrolled agent, and I am the Tax Cop. So it is the weekend before taxes start 2022, right? And there's a lot going on. Technology is not letting me be as great as I want to be. Some of that is operator error. Some of it is not. I'm learning a whole lot of things. Just now, I had to figure out how to fix the camera and the sound and all this kind of stuff. Sometimes when you want to do stuff so bad, it just go crazy, but I digress. What we want to do today is get into what tax planning is, right? That's what I want to talk to y'all about today. I'm definitely going to get into that. But before we start, I just want to drop this. Y'all, the IRS is broken. Just 100% just broken systems. Like, we're at a time where people are still being affected by COVID. And they got all hands on deck. And then people are going to be calling about, hey, where's my return? Where's my refund? They still have unopened mail that they have to open up. And just a lot of things that just are not going through. Systems got to turn stuff on, better pray stuff works, pray, hoping, and wishing, and praying. And so I want you to know that as a tax professional, most tax professionals, we have been already warned. It may take a while for you to get your refunds, prayerfully not. This is why we encourage electronic filing. And there may be some things just happening just because we're waiting on documentation. Y'all, the mail should not be as bad as it was at the beginning of 2021 because at times stuff was missing. However, you know that by January 31st, you should have your W-2s and 1099, your income documents, your 1099 dividends and 1099 interest may lag. They shouldn't, but I know that 1099 dividends won't be coming to you all until like February 15th. And your 1098s and things like that should be available. If you don't have a hard copy document, you're looking in the mailbox and you don't see it, one of the places I would tell you to go check is go check if you're a federal employee, because I live in the Washington, D.C. area, actually go in and download your LES statement. The tax document will be there. For your mortgage statement, in most cases, you should check in your email. Check your spam. Always check your spam because notifications are coming in. I have a whole folder that I have where I get notifications for e-notifications that on my account, savings account, etc., that the documents are waiting for me in my account. So if you know that you have turned off paper mail, definitely go check your email and check your accounts just so you can download that stuff. Trust me, all my merchant services accounts, they have already let me know, hey, your 1099s are here. They're ready for you to go. Speaking of 1099s, I am finishing up 1099s for people. I have been emailing clients, reaching out to them to make sure that we are straight with the 1099s that we are sending out to independent contractors or vendors that they've worked with. And I have some people that are coming in, just making sure that we meet that January 31st deadline. All right. Another thing I want to share with y'all know I'm an enrolled agent. I'm a geek when it comes to all this tax stuff, right? And I'd be excited when my EA journal comes, like really. And one of the things, like the cover of this one, I love it, is questions for clients during the 2021 tax season. That's probably not exactly in focus. Y'all see that, the Halloween colors. If you're looking online, questions for clients during the tax season. And lo and behold, what are some of the first questions that they're talking about that I discussed last week in last week's podcast was making sure that we get that ACTC, the American Child Tax Credit, that letter 6419. Y'all, me and these numbers, right? Making sure that you get that in place because you need that to file the tax return. And then that EIP stimulus number 3. Those were the first 2 things they talked about. Like, I'm not making this up. You know what I'm saying? I'm always trying to think ahead and making sure that everything goes the way it's planned. Oh yeah. Number 1 was that American Child Tax Credit, right? 6419. I'm mixing up numbers, transposing numbers, letter 6419. Number 2 was cryptocurrency. And a lot of people who have crypto, and if it's being tracked and has been tracked, you won't get your notice until February 15th. So y'all rushing to beat the deadline and you don't even have your documentation, right? Y'all, if y'all got crypto, or if you've held it, you've exchanged it, you purchased it, there's a box on the tax return that is moved from, it was like low down at the bottom of 2019. 2020, it moves to the top up there where like the presidential campaign check boxes. Some of y'all not even looking at this. The IRS is not playing. They want to know. The truth is they already do know, right? They have some idea. They might not 100% know the quantities. Ask me then why people get notices saying you owe us tax money because somebody reported you had crypto, okay? But be aware that they are in the know and you have to come up off of that information. I know you're like, but the reason why I got crypto is because I wanted to be off the grid and all this other stuff. I get you. However, what y'all have to understand is, I told you before, the IRS's definition of income is they are taxing you on any source derived. Crypto is a currency. Virtual currency is currency. It is from any source derived. You out here shopping, you going to the ATMs in the malls, you exchanging stuff, you're purchasing things with cryptocurrency, you're gonna have to come up off of that because these vendors, these stores are reporting that they received your stuff as income to them. So therefore, how could they receive it if you didn't have it? All right. So let's be mindful. You don't want to get notices down the road because something got reported that you did not tell, and now you got interest and penalties. And then you have to call somebody like myself anyway, because now you got these notices and you need help figuring out how you can get out of it because now you owe bazillions of dollars of tax just because you didn't just tell the truth from the start. Get your documents, tell the truth, figure out what you bought, go through your little notebook of records, get your little key, do what you're supposed to do. All right. And then they talk about EV vehicles. It's a lot of commercials about that. And then that economic stimulus payment, right? So other things that are talked about is pandemic type things, the grants, the loans, making sure stuff was forgivable. We got to come up off of that. Charitable contributions, making sure you know what's going on in each state, refinancing of mortgages. A lot of people got to refinance. So you got to make sure that if you sold your house or you're refinancing, those documents are shared, or at least that question comes up, right? That you documented and identifying it. Because you may have, for people who refinance, you'll normally get 2 1098s, depending on when you refinanced, right? Because you got mortgage interest that was split. And you want to make sure that we capture all of the mortgage interest. So 1 1098 mortgage interest statement may not be enough. And then teachers are being asked if they bought PPE, right? Because y'all had to go back into the classroom. God bless y'all. God bless y'all having to go back into the classroom. Already your little deduction that you got for being an educator is $250. And sometimes you have to spend your own money. Y'all was always asking us, I got 4 kids, y'all. Y'all was always asking us about 10 Kleenex and wipes and sanitizer and paper and all these things. And then on top of it, you got to have extra masks now and make sure that everybody has what they need. And sometimes y'all have to go out into your own pockets to do that. So God bless y'all tremendously. Definitely keep that in mind so that you can let your tax preparer know that. All right. So that was that. That's my introduction for today. But our focus is tax planning, right? Because I want y'all to know what tax planning is and what it's not. The reason why is because sometimes people be trying to get extra stuff than what they're not in engagement with people for, right? And so you might want to be proactive, and I encourage everybody to be proactive. We talked about that on last week's podcast on using the IRS withholding estimator, going to things where you can jumpstart your tax season and make sure everything is good to go and it's all gravy. Now, one of the things you want to keep in mind is that a tax return, I'm gonna go back to the basics, a tax return is just an outcome or a report in the previous tax season. So it's 2022. We are getting ready to file for 2021 because now we're reporting out on what happened during the previous year so you can reconcile, even out, rally up, make sure that you pay any additional tax if you did not pay enough. And if you overpaid, you get a refund. Y'all, this is where I tell you, taxes is a break-even situation. That's really what the goal is. The reason why it's a break-even situation, or should be, that's your goal to get break-even, is because if you owe taxes, that means you have not been withholding enough throughout the year, or not paying enough estimated taxes throughout the year. If you are getting a refund, that means that your governments have been holding on to your monies interest-free. They're not paying you interest. And if you got that money or had used that money throughout the year, you would have been able to maybe allocate that towards paying off debt, investing, making sure your savings account is good to go, or whatever it is you need, right? And so in some cases, we get some credit sometimes that are refundable that we're like, oh, okay, that's like gives us Christmas in July. But in most cases, the goal really is to pay enough tax so that you are breaking even, have a minimal refund, or owe a minimal amount so that you are making your money work with you and work for you throughout the year. All right. So that's my little spiel on really what taxes, how it should really work. Now, tax planning allows us to be proactive, right? We want to not always be in a reactive mode. When we look at the outcome of our tax return, that makes us reactionary, right? We reacting to what the outcome is. If I got a refund, I'm like, hey, it's Christmas in April. If I owe, you kicking yourself and be like, dang, what did I do throughout the year? I don't want to be owing this money. And it can just be a very emotional process, right? How I'm gonna pay it, where I'm gonna get it. This is not what I want. This is not what she has said. This is not how this was supposed to happen. Where did all this come and how did not all this money move the way it was supposed to throughout the year? So ways that we can do this is we can tax plan and think forward. Now, tax planning from my definition has two parts to it. The first part is we are doing projections for the upcoming year, right? So we'll use the previous year's return to kind of project, hey, is life the same? If everything is going the way you think it's going to, right now it's the beginning of the year, but if you're not going up for promotion and life looks good and you're not adding kids to the family and you're not making any investments, like we can kind of project out what that's going to look like, right? And kind of say, if everything were to stay the same, this is what it would look. The only things that are really changed throughout the year would be the standard deduction for the next year. Will adjust based off of what the government tells us and cost of living increases and things of that nature. But for the most part, we can kind of see where we are and we can do a projection off of the data we have. The other part, and the most significant part of a tax plan, is when we get to run scenarios, right? And we are taking and looking for cost savings, ways that we can use the tax code to your advantage and find ways where you are not maximizing the code so that you can actually end up with some tax savings, some additional tax savings that you have been leaving on the table. I'm always an advocate for making sure that my clients get everything that they're supposed to be getting legally. All right, so we're not out here making stuff up. I'm not out here making up and putting fake dependents on returns or anything of that. That's a great way to get 5 to 10 to 20 in somebody's jail cell. And y'all, the IRS got my fingerprints on file and they will hold me accountable for lying. So I already told y'all, I go up to the line. I am not a habitual line crosser. I'm not doing a whole bunch of crazy stuff because I am not trying to go to nobody's jail and I am not trying to pay no fine on some stuff that I done worked hard and my people in my firm have worked hard to do the right way, okay? So when it comes to those tax savings, there's several different things. A lot of times businesses end up with a lot more tax savings than individuals, but that does not mean that individuals don't have ways to do tax savings, right? There are plenty of different things that you may have never thought about maximizing. everybody automatically off the cuff thinks about charitable contributions. Maybe I should pay more charitable contributions. Maybe my medical deductions need to be higher, things of that nature, right? I'm going to tell you those itemized deductions are not a dollar for dollar deduction. Okay. So just because there's some rules to it, there's some limitations, especially to that medical one. So that may be low hanging fruit, and that may not be where you want to stay. We want to also leverage things, right? So like my people who have rental property, we need to make sure that, that is not always passive. When and if you can qualify as a real estate professional, because I have clients that have been doing nothing but having passive income, and because of the passive income, my child knocking on the door. You gotta wait. You have to wait. Thank you. Passive income, that you get advantages, right, to be able to offset some of your income. If you have a net operating loss, right, you'll be able to offset those by being a real estate professional. So sometimes it's like looking at those scenarios. A lot of times for my business owners, my small business owners, we talk about you might be in the wrong entity. You're an LLC that's functioning as a disregarded entity. When we look at numbers, sometimes you need to be an S corp, so that it's advantageous to you and saves you money, right? I'm gonna tell you, for a lot of business owners, that is going to be making that comparison and meeting with somebody to actually get some numbers, determining whether or not you should be an S corporation or a C corporation, depending on your situation, may be one of the biggest tax savings that you ever see. And I'm talking about zeros, okay? Other things that need to be looked at, also for small business owners, is taking a swing to see if you qualified in any quarters during the last 2 years. That's 2020 and 2021, up to it's actually seven pay periods, right? You got employees. For those of you, to see if you have the employee retention credit, right? So there are some things that need to be looked at, right? Because you could have gotten your SBA PPP loans and gotten an EIDL loan from the SBA as well. But there's also this employee retention credit out here where you can actually get refunded your money back on some things based off of your payroll if you qualify. That's a whole different video for a whole different day, or a whole different podcast for a whole different, like it's very nuanced. Okay. So I'm just throwing that out there. There's ways that tax planning and sitting down that you might not get during the time where we're trying to do tax preparation that could be to your advantage. Looking to see if a health savings account could be beneficial to you all. Hiring your children, renting your home out for 14 days for those business owners, making sure we are truly maximizing all our ordinary and necessary business expenses. I'm trying to think of some other, of course, determining if you are maximizing, right? And if you can maximize your 401k, and then determining whether or not you should do a traditional or Roth. Now I'm gonna tell y'all, I am of the school, probably because of what my age is, and because I would like to have a tax-free retirement. Anytime you can do a Roth, I am for you doing a Roth. There are income limits that you have to be aware of, but I'm all for people doing Roths. And the reason why is because in retirement, that is tax-free income, because the income has already been taxed before you put it in the investment vehicle that you choose, right? Yes, traditional IRAs they are the ones that get deducted on your tax return, right? They're an adjustment to your taxable income, but not your taxable income. I retract that. There are an adjustment to get you to your taxable income, right? So they impact your AGI along with student loans, et cetera, right? But you have to be mindful, because it's not a dollar for dollar deduction. It's not. And you have to make sure that you are abiding the rules, because there are income limitations that will knock you out of the situation. And you may have overpaid, right? Because you may not even qualify because of where you are when it comes to your adjusted gross income. Those are conversations not only that you need to be having with your financial planner, but you also need to sit down and take the time to have some tax strategy. By the time we get to doing tax returns, yeah, we can fix it. But what if we could have gotten in front of that and kind of projected it? Hey, I think my income is going to be this, therefore my adjusted income is going to be that. All right, so we need to figure out a whole different plan. We got to figure out what you can contribute to. We got to figure out how to leverage your 401k. Are you even maximizing your 401k? For those of you all who have employers that match your 401k, are you even contributing up into that match? Right? Are you taking advantage of the child care credit that your employer offers? And for those that are federal employees, I know because I used to be a federal employee, are you taking care of the health savings or the flexible savings accounts for healthcare? Are you taking advantage of all these things that happen to be in the tax code that can be beneficial to you and using them so that they can help you be in a better tax situation? Save you so that you are not paying more in taxes than you know or need to. A lot of times we do this out of overpaying. We do it out of ignorance, 100%, just because nobody ever shared with us that there were ways that I qualify as a W-2 employee or a business owner to legally reduce my tax liability and leverage my money and have it work for me now and in the future, right? And for generations to come. There are things that I can legally do and no one say, hey, you knocking on my door and being like, you need to get the money back, right? So tax planning allows you to engage and should allow you to engage with your tax professional on a more frequent basis than once a year. Right? For me, I can tell you honestly, I have my clients that are doing my tax planning bundles to either meet with me monthly, depending on what we're doing. So my business owners, we have ways for them to meet with me monthly. So because we're on their bookkeeping, so we're really trying to stay on top of it. We're really always adjusting. And then my individual clients are a lot of my Schedule C clients. I highly encourage them, meet with me quarterly. The reason why is because things can change a lot every 90 days, right? Let's say you're in a situation, something came up, you're looking for a way to take money out of your retirement account. We got to figure out, well, is it a Roth? What's the basis? How much is it going to cost you with tax? Are we going to have to pay a penalty? How much do you need to set aside? When you pull it out, you need to tell them how much tax to take. If you didn't take out enough taxes and now you're coming to me the following year and I'm going to ask some questions. Why didn't you call me? And when I say call, I don't mean blow my phone up, y'all, because y'all got to go through my assistant to get to me, right? However, I'm saying just reach out. Emails, I answer. Messages for my clients, my current clients in the portal, I answer. If we need to have a meeting, I will have a meeting. I'll get you on the calendar, right? If I need to record a video for you, I'll record a video for you. But whatever we need to do to put you in the best light, when I know all the details ahead of time or the scenario, like don't tell me I just took all this money out of my TSP or my retirement account. Now what should I have done? I spent it. What? Jesus turned water into wine. I can't turn the tax situation on the resolution side, I can, into something a little bit better, but only if the rules allow and the numbers align, right? I can't touch the numbers and make the numbers change. I can't do that. I do not have those miracle working powers, even though I believe in Jesus. Okay. So I just want to encourage you to whether you decide, whether you're listening to me because you know me or because you're curious about what a tax plan is. You're just coming in, interrupting the podcast. I'm trying to record a podcast. You on the podcast? Y'all see my tax deduction here? Trying to love me up. Y'all hear my tax deduction? Just busting all on my video. Like he got so much to do, right? 1 of 4 child tax credits, right? Advancements. I'm gonna be right back up, okay? I am. Give me a couple more minutes. You're looking cute. Are you gonna close my door? You gonna close my door? Close my door. Thank you, sweetheart. I'm gonna be out in a couple minutes. Real life, really happening just here. Train of thought gone, right? No, I'm telling you, whether you work with me or not, whether you're listening to me just because you know me and you're like, oh, I want to support in at least that way. Tax planning is something that you definitely need to think about. Whether you own a business, whether you're thinking about owning a business, if you have some life situations that are changing and you want to know how they impact, it's always worth an email. Or in most cases, I would say for most tax professionals, email them and say, hey, I got this situation. This is the details that, and be as detailed as possible, right? In that email, because that will shift the response that we as tax professionals give to you. The more we know, right, G.I. Joe, the more we know, the more we can be of assistance. And the more we know before we ever see the tax return, the more we can serve you. You want to work with somebody and should work with a tax professional that is out here who is willing to serve you and pour into you and look at what's the best tax situation for you and yours. I'm going to always 100% stand behind that. You want somebody who's going to teach you and leverage things for you. Tax planning is one of those things that is an investment that can be beneficial in zeros and cents. I'm trying to think of the best way to put it, in dollars and cents, right? Literally. It can save you just by taking the time to say, all right, not only do I want projection, I want to talk about scenarios, because some of y'all are not taking that leap of faith. Some of y'all are not walking out on thus saith the Lord to you, or just because the dreams and the vision, hey, I'm not ready, but there's some things I want to do. I want to get multiple streams of income, but I got this main one right here, and I don't know how me going to get more income is going to make me owe Uncle Sam and our sister to the state more money. If you just take the time out and have a conversation with somebody, lay out your plans, ask some questions prior to when it's tax season and we're doing tax prep, you'll be surprised at what the outcome may be for you. You may be able to leverage yourself into a whole different type of life that you have only been hoping and a wishing and a praying about. So I know my tone has changed a little bit, but I just, it's been pressed on my heart to really just say that. I won't lie to you, tax planning ain't for everybody. Some people's stuff is really straightforward. If you got a W-2 and that's all you got, then you don't necessarily need the tax planning at this time. But that don't mean that you should not check in with your tax professional at least midway through the year to get it ready for the upcoming year. Because some of y'all, I don't think anybody want to stay where they at. Everybody's looking to come up just a tad bit. Just a tad bit. And so that come up, that promotion alone could send you into a new tax bracket without you realizing it creeping up on you, or them kids leaving the house and you left everything on your withholdings on sky high, and you ain't factoring that them kids gone, could adjust your entire life. And you do not want to know that when it's time to file a tax return. You want to get in front of that, so somebody can tell you to correct that. Hey, fix that W-4. Hey, adjust this because, hey, you know, that kid is past the age and is not in school full time. That's going to have an impact on your tax return. And having conversations like this with your kids early and often will make a difference. Let's normalize this. I keep telling y'all, let's normalize this tax discussion. Just a little. Let's normalize this tax discussion, because it is part of legacy building. It is part of wealth building, and you are not going to be able to get around it. Y'all know people's faces got cracked with the crypto stuff, so definitely get in front of it. And know that tax planning, according to Patrice's definition, is made up and should be made up of two things. We should be looking at projections. We should be looking at tax strategies, AKA simulations, right? Things where we can actually identify and run through scenarios where we can get you to a point where we are looking ahead as to what's to come. I know the last thing I wanted to say to y'all, because you're like, okay, so how do I do a tax plan? When should I do tax planning? Do I wait till after? Getting into a tax planning situation is definitely beneficial at the beginning of the year, because right, you're in front of it. Even if you get into it in last quarter, there may be some time to save, to get it, to save some dollars before the year is over. The earlier, the better. The earlier, the better. That you can talk to your tax professional about, hey, do you offer tax planning? And if you do, what does it look like? Meet them up for that. And they might not be able to do it until after tax season. Depends on how everybody's firm is structured, right? But the earlier we can get into it and get ourselves planning for what's to come, because y'all, after last year's tax code and stuff happened in the middle of the tax season and they changed tax laws, that's where that advanced child tax credit came from. That's where that $600 that people were freaking out about. That's when they put that into a lot. That's when that third stimulus came out, all back in March of 2021. That shows you that things can shift in the middle of just a blink of an eye. And therefore your whole strategy may need to be adjusted. But if you're sitting around hoping and a wishing and a praying and not checking in with a professional, how would you know? I mean, you'll eventually get it when CNN, Fox News, or anybody else tell you. But if you're not staying up on top of it, then there are professionals like myself out here who are staying on top of things that can be beneficial. Pay attention to your tax professionals' emails. Pay attention to their newsletters if they're sending them out. Read something, and if something triggers, send them a message so y'all can get in front of it, so it can save you dollars and cents. All right, that's all I got for you. We'll do the best we can with this one. Energy is still there. Thank you for my guest appearance, AKA Barry number 4, who came in, and child tax credit number 4, who came in and made a guest appearance. All right, that's all I got for you this week. Can't wait till next week. We're gonna do a better job trying to get some things lit up for you and stuff going across the screen. I appreciate you all, and I look forward to talking to y'all again. Thank you for taking the time out to stop by and listen to Talks with the Tax Cop. We'll see you next week. Mwah!